Our guest is Craig Bernstein, and Craig is the Chief Investment Officer of the Bernstein Companies, based out of Washington, D.C. Craig, for our listeners that don't know what the Opportunity Zones are, the Opportunity Zone, it's designation created by the Tax Cuts and Jobs Act of 2017. And basically what it does is it allows certain investments in lower income areas to have tax advantages. Is that correct?
Yep, that is correct. And as you referenced, I mean, it was passed as part of the 2017 Tax Cut and Jobs Act. And the provisions really were unknown the first kind of 3 or 4 months of last year. And the program's really gained a significant amount of traction over the past year. Mm-hmm. And there are over 8,700 zones across America. Mm-hmm. And each governor from each state was able to designate up to 25% of the low-income census tracts in each state.
You know, you spent a tremendous amount of time specifically targeting family offices. What exactly is a family office, and what type of feedback have you been receiving from them as it relates to family offices?
Yeah, absolutely. I mean, family, as I mentioned, 2 minutes ago, I came from a family office background, and really what a family office is a private wealth management company catering to the needs of ultra-high net worth individuals, whether it be one specific family or multiple families, which is commonly referred to as a multifamily office. There are almost 1,000 families within the United States that have a net worth greater than $1 billion. Mm-hmm. It sounds staggering, but there's been a tremendous amount of growth that's been created since the last recession over the past 10 years.
Sure
In
has.
addition, there are almost 100,000 individuals that have a net worth greater than $25 million. The Opportunity Zone program allows investors to take any capital gain, whether it be derived from stocks, bonds, private equity, other real estate transactions, and reinvest these proceeds into an Opportunity Zone fund. Mm-hmm. And there are 3 primary benefits that would be accrued if you made an investment. The first is a deferral of your initial gains. Let's just use Apple stock as an example, until December 31st of 2026. Second benefit is up to a 15% step up in basis equal to your initial gain. The easiest way to think about that is it's basically a coupon for 15% off of your Apple taxes. And the third is really what we like to call kind of the cherry on top, which is the real main incentive of the program. If we were to do a multifamily building, apartment building, as an example, in one of these zones, let's say in somewhere in Rhode Island, if we hold that new investment for 10 years, any appreciation that's derived from the investment, capital gain over 10 years, would be waived.
That's
There effectively would be 0 capital gains taxes due upon the sale of that asset in year 10.